Hello, everyone. Thank you for tuning in to my recording of the Macroeconomics Insights notebook. This is just a little introduction to how to use this notebook for first time users of Plotly notebooks, which I'm sure maybe many of you who I'm sending this to. So, just a little introduction to how to use some of these tools and also some of my comments on like what I'm thinking about the markets because why not? Quick note of I guess a heads up to first time viewers. Up here at the very top, you'll see an button. If you have a Kaggle account and you can click the edit button, you will be able to have an editable version of this notebook. This is not necessary. The only real advantage to using this editable version is you can use the hyperlinks, which I find to be sometimes useful because you can go through things and then just click back, which unfortunately in this version isn't, I believe, useful. It is maybe. Wait, hold on. Okay, maybe in the Chrome version it is usable. Okay, well, in Chrome it works, in Safari it doesn't. Whoop de doo. Okay, great. Well, there you go. During this, I just realized in Chrome, you have a lot more features this notebook, so you can use these little links to travel more quickly around the notebook. So something just to note. And the other thing to note is, as you are going through the notebook, um, you will see when you first open up this notebook for the first time, you see this table of contents kind of sticking out like that. My advice would be to minimize the table of contents. While it's nice, it doesn't actually serve any purpose because I don't. Oh, does it? Okay, here it does actually. It allows a scrolling feature. It is nice for the scrolling feature, but when you finally get to the visuals, my recommendation is to get rid of them because it squashes the visuals. It's kind of hard to see everything. So if you see, like if I put like this, it's a little bit hard to view. So that's one thing. Now to the visuals and to what each of these different tools are. So as you can see at the very top here is my comment. Um, so a big comment for the today is the GDP print came out at 2.6%. A lot of tech earnings has been pretty sour for most, which is not very good for my circumstances, and it effectively is hinting at this slowdown that the Fed has been looking for, but hasn't really translated in terms of GDP or inflation just yet. We'll see how November looks. So my comment, you kind of summarizes what I've found interesting around the world for different countries. Also, I've added links to FT and different type of news paper articles. I'll try to add more free sources as possible. Um, Below here is my specific market views and where I think we're going to go from here. My calls for basically equities, EM, all that kind of stuff to rally from here. And in general, I think that's my view. It'll probably rally, I think, a little bit more, but not much more. We've already seen slowdown in S&P and Nasdaq quite a bit today, and I think that's going to continue, especially now that GDP is showing positive and probably cements the Fed's ability to hike rates 75 basis points more. So going through my different comments, next, the most important thing is I think the visuals. Key thing to note about the Plotly visuals is these legends. You can, if you click once, you could turn it off. If you click, double click, you can still zoom in on one. Um, Another thing to mention is if you want to look at a specific time period, for example here, if you want to look at just one time period, you can zoom in and see that time period as well. And if you double click on the image, it brings back the image. So a couple little little tricks there that might be helpful for you to examine the data more closely. Another thing here is, for example, this is the violin distribution of inflation expectations split by presidential terms. Uh, um, this is I think a useful way of seeing how inflation expectations have broken up by presidential terms. So one thing you could do is just double click on one presidential term here, and it will highlight all the inflation expectations there. And what I do is I'll just add different terms. So you'll see here one, two. You'll see that the belly or the bulk of inflation expectations has been generally lower for for I would say Obama, um, and the range, well, it's just been not looking good for Mr. Biden. And but if you look at versus Trump, um, median expectations for Biden has been generally lower for the most part until recently. Um, but yeah, Biden's been stretching higher. Interesting to note is that versus Reagan still looks much better than Reagan, and if you even compare it versus some of the stalwart presidents like Clinton, who was considered to be financially very prudent, you can see much better inflation expectations than even Clinton. But that was another time. If you compare it to anything as even Bush is I think quite a bit higher, but Obama and Trump were much lower because I think that was post '08. Um, so yeah, that's how you can use the inflation expectations. This is the another inflation expectations chart that I've added. This gives you an animation of an inflation expectations curve, as well as spot inflation print. So if you press play here, it'll slowly pull it off. If you want to accelerate, you can drag the slider to points of interest. So if you want to go more recent, if you want to go a specific point, you can look at it that way. Moving on. Next one is the real rates curve. Similar thing, slider. I think that you guys get the gist of this one. You can just move it around like that. Moving further down, we've got the bond. We got the Treasury bond spreads and flies. Um, the way I like to look at this one is uh, zoning in on specific themes and then going in from there. So, for example, what I mean by that is like, for example, here, well, first of all, we have buttons. I don't think we had these kind of buttons before. I think I forgot to mention that we have these buttons at the top, which allow us to have more specific zoomed in time periods. So we can have the full period. We can have the 1980s stock market crash, which is useful. We can have the .com period which is the 95 to 2000. Then we have, and you have the dates down here, by the way. This is the dates at the very bottom. To save space and have things slightly less cramped, I try to keep it all on the bottom there. And you have the different periods. So what I can say from here is you can see all these spreads are pretty much at historical lows. And some interesting things I want to point out is in I think here when we had the Lehman default, which was just around here. Just before it, we also had very very flat curve, and we didn't have a catastrophic kind of like meltdown at this time. So when we didn't have a catastrophic meltdown, what we saw was a pretty good steepening in the curve. I mean, we did have a catastrophic meltdown afterwards, and then you continue to see some of that steepening right here. It's like in '08, and you see some flattening in the back end. But you can see these kind of like trends that way. So that's something I want to mention. And then one thing you could do is like, okay, if say I want to focus in on a specific curve and specific theme, let's say I want to look at twos 20s versus twos 20s 30s. You can just zoom in on twos 20s 30s, and let's say I want to compare it versus ones 20s 30s. Okay, we can do that. Oops. Still gotta master the art of plotting myself. Okay, 120s 30, twos 20s 30s. And then let's say I want to look at these two flies and I want to compare the spreads against them. You can also do that. So you can add the 20s, 30s, and then you can add the 2s, 20s. And then I think you get the idea. This is like, in my opinion, a neat way to start building a picture of how different flies spreads are interacting together and how they're doing versus other things. So for example, I see this ones 20s and I want to ask myself, okay, how's that doing versus ones 10s maybe? Or I want to ask myself how it's doing versus ones 5s. So this is kind of it shows that, it's in my opinion, a neat way of seeing how different trends have emerged over time, and you can also persist these buttons as well. So that's your fly visual. This is, I think, a simple, straight cookie cutter Fed policy rate. Next up, we've got inflation expectations. Again, this is against the Treasury nominal yield curve. Sorry, this is against the policy rates. I got to change that. Like I said, work in progress. Um, this is next up is the GDP curve. So similar to before, we have the tabs that allow you to go through different time periods and just zoom in on different time periods. I've added in on this one GDP and GNI. Also, I think also a useful visual is zeroing in on specific quarters. So if I want to look at, full quarter one only, this is only the first quarters of across every single year across the whole time zone. Or I can look at during the dot-com period, pre-2016 period, etc. And you can do that for Q2, Q3, Q4, and all. So that's, I think, a useful feature. Next up is when I'm getting into the time series. So my, precaution on time series is that I don't think they're super accurate. I think they're a good indicator, but I think they're more useful as inputs for more sophisticated tools. So I'm just bringing you for the ride here. So this is just looking at the partial or autocorrelation plots of real GDP, also broken down by quarter. I put my notes there. You guys are welcome to take a look if you're really interested in this kind of stuff. Then if you go further down, this shows you what just for GDP, my predictions look like. So I'm going to just turn off some of these to give you what the blended prediction looks like. So as you can see, present, it's not great. It's not terrible. It kind of resembles the shape of what we're looking for, but I wouldn't say super, super, super reliable. I would say that AR1 was fairly, as you can see, today's print came out 2.6. AR1 was pretty good predictor at 2.9. Not as well as AR12. AR12 was really bad. AR12 was thinking minus 3.93. But if you look at it from here as well, if you look at it from just a Q3, this looks at it from the prediction of looking at the time series just from the Q3 basis versus also the ARMA 12 that I was using before. And you can see here, AR1 2.9, my second model is predicting 3.78. So, I mean, it doesn't seem like it's terrible. I think there's some more work that can be done here. I'm planning to plug this stuff into a more sophisticated model like a gradient boost regressor, or maybe a random, well, not maybe, definitely a random forest classifier regressor as well, and see how we can improve on this. Last up, I've just put a few metrics on what was the error metrics of this model. Basically, we can see that it's not good. We can see our R squared on our Tweety metric is showing us like a negative. So effectively, what this is implying is that when the model is predicting something, most of the time try to do the opposite and to less variance when it's the AR1. But you know what? Even if it's not predicting well, that could still be a good input for a more sophisticated sophisticated model. So finally, I've added a money supply. Nothing too fancy here. At the very bottom, I'm starting to add Granger causality tests today. Hopefully, we'll have that in by tonight, by tomorrow morning maybe. But yeah, little by little, we'll be adding just a couple of new sections as I go on. If anyone has any recommendations or thoughts or ideas, please do leave it in the comments, or drop me a message. Thanks again for tuning in and taking a look at this notebook as well as at this video. That's it for now. Bye bye.